Genworth for Canada's Mortgage Minute on Friday, February 22nd. Hey, some numbers out of Genworth, Canada. They made some earning announcements and they also had a report come out, and there were some very interesting numbers that came out. And basically they were talking about a shrinking high ratio market. That's right. Genworth says that since last July, insured mortgage rule changes were implemented, they've reduced the residential insurance market. And they figure that going forward, as compared to 2012, the market's going to drop by about 15%. In other words, they feel overall their number of volume and sales activity and insurance activity will be dropping by that much. In a report yesterday, National Bank Financial said that Genworth wrote essentially 16% less new insurance on high loan-to-value mortgages than it did a year ago. And of course, they're mainly attributing this to the new mortgage rules and what's happened in the market overall. Now also, the interesting thing with it is that Genworth is doing a lot more conventional insured mortgages. In 2012, Genworth wrote $20.4 billion of new insurance on low loan-to-value mortgages. That compares to $4.2 billion in 2011. And basically this is a direct result of the loan-to-value mortgage opportunities that CMHC is now walking away from. In 2011, essentially, CMHC started getting out of bulk insuring the low loan-to-value mortgages. What that is, for those of you who don't know, essentially banks and credit unions and alike will take their low loan-to-values and they will bulk insure it to get them off their books, or increase leverage and do whatever else they have to do behind the scenes to put themselves in a better position. And that essentially is allowing them, and CMHC and Genworth are taking on more. And as you know, last year, what happened was that CMHC had to increase their cap so they could underwrite more files, and Genworth has slowly looked at increasing what they're underwriting due to this as well. Now, the good news in all of this is that there's fewer arrears. Genworth's delinquency rate fell to a scant, basically a 0.14% last quarter versus 0.20 a year earlier. So that's certainly good news. Now, even for greater news, for those of you who are Genworth investors, since last July, when the stock was at their lowest point, it's now jumped by about 47% in value. So obviously investors are quite happy with where things are going. For my own 2 cents worth, I think the reality is that investors, because Genworth is a publicly traded company, would be viewing the new mortgage rules as tightening, meaning that there will be less mortgages that are underwritten that are higher risk. So investors are looking at it and saying, you know what, overall this is a good thing, and because of that they're buying Genworth stock, which has obviously pushed up the stock value by that much. So anyway, interesting findings correlating what's happened with the mortgage rules, validating that what's happened is truly the rules being implemented have truly had an effect on the marketplace. And if Genworth's numbers hold true, which they seem to be thus far, they are going to experience about a 15% drop. And let's say CMHC translates to about the same amount. That's still a significant drop in the market overall. Anyway, news to things to ponder, think about. Enjoy your weekend coming up. Again, if you need anything mortgage-wise, looking for a high ratio mortgage that's insured, give us a call at the Auxilium team. We're always ready here and able to help. You can reach us basically anytime via email, telephone, whatever you like. Enjoy this weekend, and I will see you on Monday.